All right, we're going to get started. So the topic for today is how to trade volume profile. So I'm going to go over how to read it first, like what are the things you need to know, all the terminology, and what each section of the volume profile means. So first off, there are a few different terms that are used for a volume profile. There's high volume nodes, also known as HVNs, low volume nodes, known as LVNs, value area high, which is exactly as it sounds, it's the high of the value area low, the value area, and gaps. I think that's all of them. So first off, high volume nodes are just as they sound. A node is when you have a large section of volume on the volume profile. So when you see like these large clusters of volume, these are high volume nodes. So like all of these nodes here. If they are weak, so there isn't a lot of volume, like we see here, these are low volume nodes. These are also determined as like gaps. So if we see a high volume node and another high volume node, and in between these high volume nodes, we have a much lower portion of volume, that is known as a gap. And I'm going to go over how to trade all these later, but for right now, I just want you to understand the terminology. So we have a high volume node, very low volume in between the two nodes gives you a gap. Same thing here. High volume node, very low volume gives you the gap. So what these high volume nodes are is volume profile takes all the volume that is traded at price and it puts it on the price scale instead of the time scale. So you're not looking at, okay, there was 1 million volume on the 22nd. There was 2 million volume on the 23rd. You're not worried about where the volume is on the time scale. You're worried about where the volume is on the price scale. So we want to see at what price levels is volume trading. We don't care about when the volume was traded. We want to know what price they were traded at. So volume profile puts all the volume onto the price and gives you these nodes. The lighter color, my pink and blue, are the buy volume. And the darker color, the black, is my sell volume. Oh, another thing I forgot to go over was POC. POC is the highest volume node. The highest volume node on the entire volume profile. So whichever node is the highest is the POC, the point of control. Okay? The value area, okay, so the value area is the section of the whole volume profile that has 70% of the volume, and you can change that. So if we go into our volume profile, we can change what percentage of the value area do we want, what percentage of the volume do we want to be the value area. The standard is 70. Some people like to use like 80, but I just leave it as default at 70. So the value area is basically where most of the price action is going to be traded. And there's different shapes of a volume profile, which I'm going to go over here in a little bit. But for the most part, the value area is where you're going to see most of the price action. So if price leaves the value area, like we saw here, it left the value area. We have the value area high here. You see where the value area, my pink, turns into blue. That is the ending of my value area. So this value area is ending here. So when price broke out of that value area, you saw a decrease in volume compared to that value area. So we were not able to maintain outside of the value area, so it pulled back into that value area. What you will see on very strong bull moves or bear moves is that value area high will actually act as a support or a resistance. So if we break through that value area and we come back down, that high is going to act as support and we're going to try to push higher, which we're actually currently seeing. So this could try to push higher here because it's using that value area high as a support. What you would want to see if you were bearish, you would want to see it fall back into the value area and then fail to break out again. So if we fell back down, if we tried to get outside the value area, we would pull back towards the POC and towards the other high volume nodes. Okay. Same thing with the value area low. So this would be our value area low, right? It's the very last point of our value area. So if we were downtrending and we came down to the bottom of our value area and broke through it, if we wanted to continue downward, we would need to use that value area as resistance, or we would just need to keep pushing downward with good volume, and then you'll start to push the value area, because the value area is going to be based on where the volume is being traded. So if you trade heavily outside the value area, that value area will shift towards where that volume is being traded. So for example, if we start to see a push up here, and this starts to heavily trade at these prices, this value area is going to shift to this upper section, which I can show you if I zoom in. If I zoom in here, it's going to shift. You see how it's shifting? It's going to shift to where the volume is mostly trading. So if this continues to get volume above this value area, we will see a shift in this upper range, which is bullish because now you're trading inside your value area and you can start to push higher. You're getting a lot of volume towards that upper price, telling you that people want to trade that price. High volume nodes act as magnets. They're typically where price is going to be pulled towards. So if you have, for example, a high volume node here and high volume nodes down here, these are going to be magnets trying to pull price lower. But if price is very bullish, you're going to use these volume nodes as support, and you're going to start to form new high volume nodes above that zone. And if you get pulled towards it, you're going to use it as support and just continue to trade higher. That would be a very bullish scenario. Low volume nodes, areas that do not see a lot of volume, are areas of rejection. They're showing you that price does not like to trade in that range. So 6,500 is an area of rejection currently, if we're looking at the volume profile of the last few days. This is telling you that if price were to come down and break through this high volume node, we are most likely not going to stay in this section for very long. These are areas in which you start to see wicks. You're very likely to see wicks in gaps. So if price were to break through this volume node, it's either going to jump down to the POC or it's going to wick and jump back up. It's not likely to trade in this range. If it begins to trade in this range, that is called a gap fill. And you will start to see, say, this is the high, this high volume node becomes the high, this high volume node becomes the low. If we start to fail in range in this gap, this becomes an accumulation period. You are filling the gap. For this to happen, you want to see a high being defined, a low being defined, and you want there to be increasing volume inside of this range. So if this gap starts to fill in, that is what you want to see. You want to see the gap fill. And you can trade gap fills when they are finally broken to the upper or lower side. once they have filled in. So one thing I want to go over before we get too much into it, I want to go over the different shapes of a volume profile because each shape is going to mean something different. So the most common shape you're going to see in a volume profile is the D shape, the bell curve. You're going to see the POC towards the middle, and as it pushes higher, the volume is going to be lower and lower. And as it pushes lower, the volume is going to be lower. The highest volume is going to be towards the middle. So as we push higher, it's going to get smaller and create that D shape, the bell curve. And as it gets lower, it's going to get smaller. Typically, this bell shape is when you have days of consolidation, when you're seeing arranging days, consolidation days. How you want to trade a D shape is you want to be buying the lows and selling the highs. If POC is established in the middle of the volume profile and you start to see price pushing above your POC, but your volume is not increasing, you're seeing a decrease in volume, you want to start to sell the highs and target the POC. Same for the downside. If you start to see a push below the POC and volume is not increasing with price, then you want to buy the lows and target the POC. Another shape that you'll see often is the P shape. This is when your value area is towards the upper range of your day and the POC is towards the upper range of that value area. So if you have the value area at the high of the day towards the upper range, your POC is going to be with that value area and it's going to be towards the upper side of that value area. With these days, you want to be very careful selling the highs, but you can still buy the lows. Because these days are typically bull flag days, where you see a push up in price, an impulse move up, and then you start to see consolidation. That is basically what we're seeing here, but this is not giving us that P shape. So if you see a bull flag pattern like we see currently, and the volume profile is matching that pattern with the P shape, where you have your value area situated at the upper range, and you have high volume towards that upper range, and then as price decreases, your volume is very low. This is a standard bull flag volume profile. You want to be very careful selling the highs, but you're safe to buy the lows. Because it's basically like you're selling the highs of a bull flag, and a bull flag is very likely to break out to the upside. That's why it's called a bull flag. The other pattern you want to be watching for is the lowercase b shape. Lowercase b shape. It's the opposite of the P. It's when you have low volume towards the upper side of your day or your visible range, and your value area is situated at the lower portion of your range or your day. And you want your POC to be towards the low side of your value area, towards the low. So when you have a B shape, you want to be very careful buying the highs. You want to be very careful buying the lows, but you're safe to sell the highs. Because this is a standard bull flag. So if we see a impulse down and then we see some consolidation, you are much safer to sell the highs than you are to buy the lows. Because more often than not, a bear flag is going to break out downward. That's why it's called a bear flag. It's bearish. So if you see a bear flag with a lowercase b shape volume profile, you want to be very careful buying the lows, but you are safe to sell the highs. One other shape that is very uncommon, it's kind of like we're seeing currently, is the uppercase B shape. It's when you have a very strong high volume node towards the upper range, a very strong high volume node towards the lower range. Let me draw this a little better. So it's when you have a high volume node towards the upper range, a high volume node towards the lower range, and then in between you have a gap. So almost exactly what we're seeing currently. These patterns are pretty even. There's not really a strong edge to these patterns. What I mean is they don't lean bullish or they don't lean bearish. They're pretty even. How you want to trade them is if price is, so whichever node has your value area. So let's say this node has our value area. Let's say this node is our value area. If price is towards the upper node, so let's say price is doing something like this. If price is towards your upper node and it's not getting a strong increase in volume, your edge is going to be short selling the highs. So if you are able to sell the highs and target the price gap or target the value area with the POC, that is typically where you're going to get your edge. Let me go over that one more time. Might have confused you guys. If you see a uppercase B, if there's a value area towards the lower section and price is towards the upper section, you are safer to sell the highs if you are not seeing a strong increase in buying volume towards this upper range. This is basically a trap play. So if you're seeing a move up, but your buyers are not holding that consolidation, if your buyers are not strong, this is basically a trap play. And you can sell the highs and target the gap in between that value area and the high volume node. And you can target the POC. So if POC was down here and you sold the highs, you can target that gap or you can target the POC. The same is going to be said for the downside. So, or for the upside, excuse me. So if we see that uppercase B shape, but it looks more like this, where the upper range has the most volume and it has the POC. So this would be our value area. So if your upper range is your value area and your price is trending towards the bottom section, so if we're trending downward and kind of bear flagging, if we're not seeing the sellers hold the price down into this node, if we're not seeing strong sell volume towards this lower range, we can buy the lows and target that gap or target the POC of the value area. So that is how you would trade the bear flag if it was a trap. And that's how you would trade the bull flag if it were a trap. So for example, with the current price action that we're seeing, we have kind of this B shape, right? We have that high volume, the gap in the middle, and then we have the high volume down towards the bottom side. The bottom side has the value area, and the bottom side has the POC. They also have the higher volume nodes. So most of the volume is towards that lower section. So if this pushes upward, if this tries to regain this high, and we do not see significant buy volume increasing as we rise, you are safe to short that test and target the gap or target the POC. This style of trading is very risky because you're trading the opposite of a textbook bull flag and the opposite of a textbook bear flag. This would be more of a distribution accumulation technique. So if you haven't watched my accumulation distribution video, I highly recommend doing that, because this B shape, you are going to be looking for that accumulation and distribution. I think I've covered everything for the basics. Let's see. Do you guys have any questions about any of that before I move on? Okay, I don't see any questions, so I'm going to move on to another use of the volume profile. So for this, all these examples up until this point, I have been using the visible range volume profile. That is the volume profile of whatever you have on your price chart. Now I'm going to show you guys a few techniques using a lower time frame and a session volume profile. The difference between the blue node and the pink node is the pink is the value area. So this is where 70% of the volume on the profile is being traded. Outside of this value area is low volume. Okay, so I think I talked about this a little bit on my VWAP video, but I'm going to go over it a little bit more on more of a sense and volume profile. So for this technique, you're going to be using a lower time frame, typically lower than an hourly, because if you go higher, the session volume is going to be not helpful. It's not going to be visible. You want to be using an hourly tops. I like to use a 15-minute. You also want to use VWAP. I call this market bias trading. You're looking for the bias in the market. So if we look at the past, let's ignore the current price action and let's look at the past few days. What you want to be looking for on your volume profile, the main thing is your POC. So there is a nice little tool here on the visible or the session volume on TradingView. Extend POC right. Make sure you have this turned on. We're going to turn this on. So now all these lines are our POCs of the day extended to the right. Okay, so make sure you have that turned on. Make sure you have VWAP. You can use the default VWAP. The only thing special about my VWAP is it's coded to color red and green. And I can show you the code real fast. You can pause the video if you're on YouTube, and you can copy the code. It's very simple. It's only one line of code. If you want to pause the video and grab that, feel free. Okay, so those are the two things you need. You need session volume and you need VWAP. That's it. Once you have those two things, make sure you have your your session volume POC extended to the right, and make sure you're trading on a lower time frame. Anything lower than an hourly. So what we want to look for is when we are looking at previous price action to get a gauge of the market sentiment, we want to be looking at where most of the volume is being traded, so where our POCs are, and how is price reacting to VWAP. So let's say we're on this day here, and we want to find out where our supports are and where is most of the volume being traded according to where price is currently. So if we're trading here, I'm going to look at the previous day. I'm going to see there is a massive volume node here. And that also lines up nicely with VWAP and the POC. So this is going to be a strong support if we fall lower. This is where our VWAP closed, and this is where our volume profile POC is on the previous day. So this is going to be a strong support if we fall lower. This is also showing me that we were very bullish the day before. Most of the day we traded above VWAP, and the one attempt that we made below VWAP quickly was pushed higher, and we retook VWAP on a bullish move up. So this is showing me that the previous day's market bias was bullish. So if I look to the left to see the previous day, we're going to do the same thing. Where is most of the volume being traded? Where is the POC? And how is price reacting to VWAP? This entire day, we traded above VWAP. The entire day. Most of our volume is being traded on this node right here. This is our POC of this day here. We broke through that POC towards the end of the day, and we pushed higher. We had a little bit of a fake out on this candle here, but look where we landed. We landed right there on VWAP. So throughout this entire session, we were uptrending, VWAP was uptrending, and we were trading above VWAP. So this day is 100% bullish. So we have a bullish day. We've determined where our support is. We've determined where most of our volume is being traded. If you would like to, you can grab your value area section. So if you want to mark your value area highs and lows, you can do that. I find it gets a little noisy if you do this. But if you would like to mark your value area section, you can do that. But you can see if you're using the POC extended right and you're constantly marking your value area, your chart's going to get a little messy. But where this style helps you, if you do mark your value area, is when we have our day traded here, right? So we see a break of this value area high towards the end of the day. Now this is all in hindsight, mind you. The volume profile is going to be forming as price is trading. So when you're doing this kind of analysis, this is hindsight analysis to help you with your current price action. So keep that in mind. So what we can see here, if we mark our value area, is we can see where did price break out of that value area. So if we're trading here, like if this is our current price, and we want to see where did like this breakout occur, we can take a look at the previous day, take a look at the value area, and find where that breakout point was where we broke out of that value area. The same thing you could have done. You could have done for the previous day if we were trading on this day. We see our value area high here. We see this is the point of breakout. That is where our breakout occurred. And look where we bounced. Almost exactly where our breakout occurred on the previous day. So this form of analysis can help you, but it gets a little noisy. So we saw our breakout here. We did see a pullback to our breakout on this current day, but then we don't really see a pullback to that breakout on our next few days. So let me clean this all up. So let's keep going. So what do we see on this day? We see price is trading above VWAP. We have very little volume below VWAP. VWAP is very close to our POC, which is very strong when price is trending above it. So we have our VWAP uptrending, our POC's here. VWAP is right on POC and we're uptrending, right? Price is uptrending. So if we see an increase in volume towards the upper section of this value area, it's going to be exactly as I told you before. This is currently a D shape, right? We're currently seeing a D shape. If we start to push higher and push that volume into that upper node, and we're able to keep the buying action going as our price is rising, that is very bullish. But we don't see that here. We don't see that. We see volume start to come in, right? But this is as our price is consolidating and as our price is pushing lower. We want to see this volume coming in when our price is pushing higher. So we want to see the buyers holding this price up. So what this is going to do is this is going to act as resistance. So if we push higher during this day, our VWAP is steady next to POC. If we're not able to regain that volume node, if we're not able to break through that volume node and maintain that volume node, this is going to act as resistance. And where are you going to fall down to? You're going to fall down to VWAP and POC. So this is where most of your volume is being traded. If you see that push higher and you're not seeing that gain in volume, you're going to head back down towards where your volume is being traded. Because think about the psychology behind the volume profile. What is this telling you? If you have studied auction theory, you understand what the volume profile is telling you. It's telling you that most of the buyers think that 62.70 is a very good price. They like buying 62.70 and they like buying 62.90, 62.80. They think that this price is a fair price. That is what a high volume node is showing you, that they believe that is a fair price. The low volume nodes are showing you that they do not believe that is a fair price. So if we see a low volume node, this is actually a high volume node, but it's not as high as our POC node. This node is telling you that not only do the buyers think this is a fair price, the sellers think this is a fair price. And if sellers think it's a fair price, they're going to sell that and push the price lower. That's exactly what they did. You can see here the price was consolidating and every attempt to push higher was wicked and failed. It pushed higher here, got wicked. Pushed higher there, got wicked. And the next move got engulfed. That is telling you that most of this volume here is actually sell volume. The sellers believe this is a fair price. So if the sellers believe this is a fair price, and the buyers believe this is a fair price, and this is not a fair price for either buyer or seller, you're going to want to look at this range as where your price is going to be trading until there is a breakout to the upside or downside. So before we move to the next day, let's mark our value area high. And let's see what happens. So here we see our value area high is broken, retested as support. Like I told you in the beginning of the video, what did I tell you? When the value area is broken and tested as support, you are typically going to see a bullish move up, and you're going to see the value area shift towards that upper range. Because that is telling you that the buyers used to think this was a fair price. Now they're breaking out of that and they're buying higher and holding price to a higher standard. So now they believe this is a fair price. So this used to be your value area. Now this is your value area. Because buyers don't think they're... buyers thought 68 was a fair price, but now they're willing to pay more. Now they're willing to pay 73 for Bitcoin. Now they think 73 is a fair price. And that's what that shift in value area is showing you. It's showing you that the buyers believe they're getting a fair price for buying higher. So, okay, what do we see? We see a break of our value area high of the previous day. We are unable to regain our POC. We stay above the value area high. We see our VWAP start to uptrend. So we are uptrending on VWAP. We are never able to break VWAP. Look at this. Test a VWAP, push higher. Test a VWAP, push higher. Test a VWAP, push higher. We're never able to break VWAP. This is a 100% bullish price action day. Even though we're not seeing a massive increase in price, we do see an increase in price in the beginning, but then we kind of just consolidate. But even though we're consolidating, we're staying above VWAP. And if we can stay above VWAP, then we are a bullish day. So what do the increasing POCs show you? If we're zooming out and we have our tool set to show the POC, extend it, if we're seeing a constant increase in POC, in point of control, what is that telling you? So we know that the point of control is the highest volume on the volume profile, right? It's the highest, it's the most traded at price on the value area. So if we see constant increases in the most traded price, what is that telling you? That's telling you that you are on an uptrend. That buyers are consistently telling you that they're willing to pay a higher price. The same is said for if we zoom out and we're in a downtrending price action. Let's go back to like our bear trend here. Oh, I don't think it's going to show me, it's not going to show me the session volumes because it's too far away. But just know that if you see a downtrend and you're constantly seeing the POC being decreased, that is telling you you are in a strong downtrend and people are willing to sell lower. Okay, let's move on. So what do we see here? We saw a massive bullish day. We were never able to break VWAP. We see that most of our volume is being traded at this price. This is our POC, which is 67.85. And these are our two strongest volume nodes, around 69.50 and 67.85. So if you want to, like I said earlier, you can mark the value area of your previous day. And that was where most of the volume was traded during the previous day. You already have your POC marked, so there's no need to mark that. So if we start this next day, it's going to be hard to see because we're right there in the volume profile. If we start this next day, and it looks like this day, and we just start uptrending, VWAP's uptrending, then you don't want to be selling. You're in a bullish trend. You want to trade with the trend. So if price is increasing, volume's increasing, you're not able to break VWAP, you're seeing strong volume towards the upside, you don't want to be selling that. Your sell signal is going to be when you lose that volume node, like I told you on that previous, I think it was 2 days ago. You see that volume come in, but look what we're seeing on the price action. You are wicking that volume node. You're using that volume as resistance. It's telling you that the buyers don't see this as a fair price, but the sellers see it as a fair price. This volume node is being created by sellers. This is not being created by buyers. If this volume node was being created by buyers, we would be seeing an increase in price. Because the sellers believe this is a fair price, they are going to sell every attempt they get to move higher. Because they believe that selling their Bitcoin at 75.50 is fair. They don't want to sell it higher. They want to sell at 75.50. I mean, they do want to sell higher, but they don't believe they're going to be able to sell higher because they think that this is a fair price. So that is your first sell indicator, that you're constantly wicking and you're finding strong sell volume towards the upper range of the day. Your next sell indication is the break of VWAP. We are able to break VWAP on this move here. And then look what we do. We wick it, and we instantly try to pull back and test VWAP. And then we fail VWAP yet again. So we have our failure of VWAP, a close below VWAP, Hey, Mr. Burnsy, I appreciate the sub, man. The 8 months in a row, appreciate that. I think you subbed yesterday, just didn't show up. But thank you, man, I appreciate that. But yeah, so we see our failure of VWAP on the close below VWAP, and then we see the push higher, and we also failed on the first test. That is your second sell indicator. So you have your first sell indicator, the failure to gain buy volume on this node, your second sell indicator, your failure to regain VWAP. And then you bounce off your POC here. We don't know that this was the POC during this bounce. So this is hindsight. So I can't 100% tell you that this was the POC before this bounce. But if this was the POC, we are seeing a bounce off POC, but then a break of POC. That is another sell indicator. What we're actually bouncing off of here is what? The previous day's value area high. So what did I tell you earlier? If we were going to trend heavily to the upside, we would want to bounce off the value area high as support. Because what does basic technical analysis tell you? Support that is broken is now resistance, and resistance that is broken is now support. So if we have a resistance that is broken and tested to the, if price is above it and tested and continues to go higher, that is now a support. We see it tested again here. This is your value area, resistance, support, support, break of support. That is your next sell indicator. Look where price bounces. Look where price bounces. I could not make this up. This is a perfect bounce of the previous day's POC. Look where our POC is. If we use our TradingView tool that extends our POCs to the right, that is telling us that this is the highest volume. This price got the highest volume on the previous day. So if this price is our high volume node on the previous day, what is that telling you? That's telling you that during yesterday's session, a ton of buyers believed that 6,800, 6,820 was a fair price. So if they thought that this was a fair price and price pushed higher but now is rejecting down, they're going to be buying that again because they believe that that is a fair price. That is going to act as support. And that's exactly what we saw. We saw that highest volume node, that POC, hold price up and act as support. But now what are we seeing? Now we're seeing a retest of VWAP. If we are not able to break VWAP here and we reject, we still have a support at this value area that is acting as a very key level. But if this support is broken again, this is very bearish. We tried to price discover higher. We broke VWAP. We broke the POC. We tested yesterday's POC. We're currently retesting VWAP. But now we have to bounce on the current day's, or sorry, the previous day's value area if we want to continue higher. Now, this would actually line up nicely with this pattern because we're seeing an inverse head and shoulders. This is not a proper inverse head and shoulders because typically you want an inverse head and shoulders to be on an impulse move down. And then you want to see, then you want to see that inverse head and shoulders. This is a local impulse move down, but if we zoom out, this is an impulse move up. So this could be an inverse head and shoulders, but it's not too 100% textbook. But what we're currently seeing with our volume profile and VWAP analysis is if this were to fail and test this value area high again, if it were to bounce, this would line up perfectly with this inverse head and shoulders. This is a way to use volume profile and VWAP as confluence signals with standard price patterns. You'd look for that failure, bouncing off POC. VWAP is acting as your neckline. You're going to bounce off the value area high as your support. And then if you break VWAP, you're not only breaking VWAP, you're breaking your neckline of this inverse head and shoulders. If you break your value area high of yesterday downward, you're not only breaking that value area bearishly, but you're also you're indicating that this inverse head and shoulders is invalid. You're invalidating the inverse head and shoulders. So that is a very simple way to use these methods in Confluence with your price patterns. So just to recap, I know I went over a lot there. You guys are probably going to have to watch this video a few times to understand it all. Just to recap, very simple things with this method. If you're using session volume method, you want to see where your POCs are, if they're increasing or decreasing with price. You want to see where your high volume nodes are. So we see there's a high volume node here, which acts as your POC. We see there's a high volume node here, which acts as your POC along with higher nodes. You want to see where price is trading according to VWAP. So if VWAP is uptrending and price is uptrending, that is a very bullish day. If price is downtrending and VWAP is downtrending, that is a very bearish day. If price is consolidating and VWAP is consolidating, that is obviously a consolidation day. And what you want to look for is, like I told you in the first half of the video, was that D-shape volume profile. So if you have a D-shape volume profile during your session and you see VWAP trending sideways and price trending sideways, you are safe to sell the highs and buy the lows until that pattern is broken, until we start to see a break of VWAP in an ascending or descending VWAP. This is how you can determine market bias. How to set up the indicator on 15-minute. How to set up volume profile. If you go to indicators, volume profile, session volume. Session volume is the one that I'm using here. If you want to use the one in the first half of the video, it's visible range. You can use them both simultaneously if you want to. So what do we see if we use these both simultaneously? We're seeing that there is a high volume node here, which is our POC of this day. We're seeing there's a high volume node here, which is the POC of this day, along with the POC of this entire range. But we're not seeing any volume or any POCs in between. So on this volume profile, the visible range, along with our session volume, we're seeing a gap. So if price were to come down, it is most likely not going to stay in this gap for very long unless it creates a defined high and a defined low. If it comes down and wicks it, it's not going to stay, obviously, for very long. It is a rejection zone. But if it comes down and creates a high and creates a low, you are likely to stay in that gap until that gap has filled in. But I think that covers just about all of it. If you guys have any questions, feel free to post them. We'll get to them as soon as possible. If you guys are watching this on YouTube, if you have any questions, feel free to post them in the comments. If you like this content, please hit that subscribe button. I have a ton of videos coming out very soon. If you're on Twitch, Feel free to post your questions in the Twitch chat and I will get to them right away.